Hello everyone, welcome to the July market recap from Investors Asset Management, where we recap the biggest news in the markets and the economy from the past month. So, two main things happened in July. First, the stock market hit an all-time high, highest it has ever been. Second, the Federal Reserve cut interest rates by 1/4 of a point. And if you're interested, that's the Federal Reserve right behind me, or at least the regional branch of it here in Atlanta. So let's start with the stock market reaching an all-time high. The stock market reached this high based upon two main reasons. The first one being the trade tensions with China, while they haven't been solved, are not causing the market to be as volatile. If you want to read more about that, you can go back to our blog post from May of 2019 called China, China, China. The second was just the mere anticipation of the Federal Reserve cutting rates. Now, this is important because they haven't cut rates since about 2008, December of 2008, where they cut rates really low to start stabilizing us from during the Great Recession. Okay, so let's dive into this interest rate thing because this is a big enough deal to affect you and I in some pretty significant ways. Now, the Federal Reserve is the main banking system here in the United States. They have been charged with the economic and financial stability of our country, which is no small task. One of the main ways that they help to stabilize the country is by raising or lowering interest rates. So let's use this as an example. So if interest rates are higher, we as consumers are less likely to buy things. So it can sort of slow the economy. When interest rates are lower, so let's say interest rates drop from 4% to 2% on a car, you and I are much more likely to go buy that car. Or fill in the blank. It could be a refrigerator, a computer, or a riding lawnmower, whatever your thing is. So when we're more likely to go and buy these things, then the money will then go into the business, and the businesses can use that money to invest in their infrastructure, they can pay their people more, they can hire more people, which makes the business grow, and then those people have more money to spend on things like cars and riding lawnmowers, refrigerators, etc. So when interest rates are cut, it helps to stimulate the economy. And when interest rates are rising, the economy would slow a little bit. So this is, again, as I mentioned, the first time the Federal Reserve has cut the rate since the Great Recession back in 2008. They started raising them again in 2015 or 16, and they've raised them about 9 times in the past 3 years. So it's a pretty big deal that they have cut them. Now, a lot of people are confused as to why they cut them. So typically the Fed will cut rates when the economy looks like it's slowing, and currently there's no indicators that's showing that our economy is going to slow down anytime soon. So it's a little bit controversial that they cut them. Some people were hoping that they would cut them even more, so herein lies the challenge. We'll see. So the bottom line for July, about 2 things I think that you and I should be thinking about. The first one is, again, stock market, all-time high. If you haven't checked your accounts, go check them. It could give you a little boost right now. They should be up. Secondly, interest rates are decreasing right now. So if you've been holding out for that bigger purchase, like the laptop or the car or the riding lawnmower or something that you want to finance, then now is a good time, or in the next couple weeks, it would be a good time to start looking at those things. Also, third thing, if you own a home, you might want to start keeping your eye on the interest rates to see if this is a good time to refinance.